Ladies and gentlemen, my name is Greg Michalowski. This is a Forex Quick Look. I'm going to take a look at the dollar versus a Swiss franc and some interesting technical stories to tell. So let's get started. Looking at the hourly chart, there is a couple of swing areas that are in focus here for me, and it encompasses this area right through here. The upper swing area was started to be defined going all the way back to this day, March 14th or thereabouts. And then we started to find resistance against this area right through here, which helped form this swing area. And before moving up to the upside and trading yesterday, once the price moved above the top end of this extreme, we started to see rotation to the upside with more momentum. Moved into another swing area right through here, where we had again another number of swing lows and mostly swing lows through here before rotating to the downside. So we came up to that area, found willing sellers, and the market rotated back below this 200-hour moving average. It's a green line in the chart. And if you look back in time over for this currency pair, what we have seen is a pattern of failures above the 200-hour moving average. We can outline it right here, right here, right here, right here, right here, and where the market tried to get above the 200-hour moving average, failed here after about 5 hours. So the buyers certainly had their shot, and then they rotated back to the downside. We saw the increased momentum. And trading yesterday, we got above for 2 or 3 hours before the market again rotated to the downside. What is a nice clue for traders is that you see these highs right through here. How the market fell below the 200, came back up toward it. Sellers leaned against the 200-hour moving average, and when you lean, you have your risk just above that level. And this time the sellers were right. The market moved down, and we even broke below the 100-hour moving average to this lower swing area. This lower swing area is defined more by the price action over the last 4 or 5 trading days, where the market had support here, 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 here. And in trading here today, the market came down to the upper end of that swing area. Now, you're asking, what about this break to the downside? Well, that break to the downside took the price all the way to the 90 level, a nice round number where buyers came in against that level, and then could not sustain the momentum. It looks like certainly looks like a failed break here, where the market saw momentum, a break to the downside, increased momentum, goes to 90, and then starts to rotate upside. And where this area becomes more important is where we start to define the lows through here, here, and here, and trading here today. As you see, and we're holding support right there. So what does that say now for us as traders? Well, the dip buyers are certainly trying to buy against this swing area. So if you like the dollar, want to see the dollar move higher, and want to play the dollar versus Swiss, this is a low-risk trading opportunity where, as long as the price remains above 0.90274, you're okay. And you should see further upside momentum. Now, what do you want to see on that move to the upside? Well, you want to see the price move back above the blue line right here. That's the 100-hour moving average, and stay above that level. If we're able to do that, then you want to see the price move back above this swing area and stay above the swing area, and then ultimately move back above the 200-hour moving average and do something different that it hasn't been doing over the last 4 or 5 different times above the 200-hour moving average, is just stay above that level. That's the game plan for traders buying against this area. For traders who are looking more at the bearishness from the price action trading here today, you'd want to see the opposite happen. That is, you'd want to see sellers leaning against the 100-hour moving average and forcing the market down below this level, back down to the 90 level. And if we get below the 90 level, then opens the door for further downside potential. So we have a battle sort of going on here between this swing area down here of support and the 100-hour moving average right here. We'll see how it all plays out today. My name is Greg Michalowski. Good fortune to trading. Bye-bye now.